Hey traders, happy Sunday and welcome back to another Sunday video where I get ready for the week ahead. I talk about trading ideas, things that I'm looking at, things I'm positioned in already, and much more. I was actually looking back at some of my old Sunday videos from a few years ago, and it's kind of crazy just to go back in time and look at what look where you've come from and what you've been trading all along. And I've had the same strategy or general approach to the markets for years now, but just amazing just to look back on it. I encourage you, if you have a second, just go back and look at, old things you may have published on the internet or, journals or, just things that you might have done in your trading journey early on. If you've been doing this for a while, it's very nostalgic. Anyways, this week we're going to talk about gold. We're going to talk about the dollar index. We'll talk about, of course, what happened with the stock indices and just basically where I am positioned. First, I want to just brag for just a second. I did this a couple weeks back where I had been going through a pretty substantial drawdown. I had some pretty bad slippage on that Monday morning open where the NASDAQ and everything slipped much lower. I took some pretty rough exit points, unfortunately. But the good news is that I was able to kind of stay convicted with some of the areas of the market that I really liked and bounce back very well the last few weeks. Predominantly, these gains have been made from some of my tech-focused entries. I bought like semiconductors and things like that. But I just wanted to show you that really was a bit of a bummer that slippage was pretty awful. In fact, I'll show you that here. So if I take this back off and we just go really quick to what the culprit was, it's going to be QQQ. And this is the NASDAQ. And that morning, futures and FX and everything pretty much gapped open. And you can see what actually ended up happening is I had an entry point here. My stop loss was here, and I actually got filled right there. It was pretty awful. The fortunate news is that I was still bullish on the market at that time, even when that big gap open happened. And when we had services PMI come in better than expected shortly after, I was able to jump in on some of the names that I liked the most, like the semiconductor ETF, SMH. I also bought the S&P500, SPY, and my personal favorite recently, which has been IWM. This is the Russell 2000 index, which absolutely killed it on Friday as we heard some big news from Jerome Powell. We're going to get into all of that here as we get started. I do want to just encourage you, if you're new to the videos, hit the thumbs up button, subscribe, and let's talk some charts here. So first, I want to start with the dollar index. What happened on Friday? Well, the dollar index completely fell apart on Friday, and for very good reason. The long story short is that Powell came out and he changed his focus from the worries about inflation to saying inflation is not really our primary concern anymore. Now our primary concern is jobs, and jobs data being cool is or cooling jobs data is very bearish for the dollar index. Remember, the dollar index is kind of like a reflection of the US economy to a degree. When the US economy is doing really well and the Fed is rate hiking to kind of slow down an overheating economy, that's the sweet spot. That's going to be your 2022 environment where you had a pretty strong economy and inflation was rising, so the Fed was cooling off or trying to cool off a very strong and overheating economy. Now we are maybe entering into the opposite effect. We are seeing the economies of the world slow down, but the US has now kind of really pivoted towards more of a slowing economic data point and or points coming out. And I want to show you that because it's really important that we understand this together here if we're going to push forward, talking about the dollar index. What we've seen is jobs data coming in light on the NFP report, which is the monthly filing of jobs data or jobs added. We've also seen unemployment claims kind of sticking on the higher side than we've been seeing in the last few years. And maybe the big culprit here is this figure right here. It's the unemployment rate, which has been trending up recently. And I think that it's finally really gotten the attention of the Fed and taken precedence over the inflation story. Because if we take a look at inflation, what we can see is inflation has really come down from its kind of really threatening levels. At one point, guys, we were at like 9% inflation year over year. That was really scary. And so the Fed raised rates aggressively. And it seems like their actions have actually done some pretty good work here to get inflation more under control. So squarely, the attention has changed to the jobs market. And that is why, again, if the jobs market is under threat, that's more of an economic data slowing problem. And that's going to lead to Fed interest rate cuts, which are very bearish for the currency. So the dollar index, I've been bearish on it. And if you've been watching every single one of my Sunday videos, you know that we've been bearish on it because I'm also bullish gold. And I'm currently long gold as we speak, I'll show you my GLD entry that I got on Friday, or on Thursday, actually, I believe. Was it Friday or Thursday? It was Thursday. Yeah. So Thursday, I mean, I wish I had more entries that looked like this, guys. If we take a look at gold, again, gold just wicked down into this area here of support and just ripped off of that. And part of the confirmation here, we hit that support level and that was clean and everything looked good, but it was the fundamentals. At the end of the day, the story that I just told you about slowing economic data and inflation cooling enough for the Fed to start cutting rates, that's very bullish for gold. And so our system here, the Edge Finder, has completely zoned in on that. And I love to see that our system is working properly. Seasonally, it's a bullish time for gold. The trend is to the upside. We have, some economic data, some of it showing signs of cooling, like the jobs data, and interest rates coming down on the, the 10-year Treasury bond yields. Those are coming down. We're seeing signs of the Fed likely to cut interest rates. That is very bullish for gold. And so again, we have a nice little backdrop of, the Fed's going to likely cut rates the rest of this year. We have slowing economic data. People want to be in gold. And that is clearly why gold is having not just a good year, guys. Gold is outperforming the S&P 500 index, which is a very impressive thing to do. Gold, the S&P has also had a really good year, but gold actually is outperforming since the beginning of this year with these huge run-ups that we've seen. So really good year to be a gold bull. If you are also one of them, then shout out to you. This is probably one of the bigger contributors. If I go back to my P&L calendar, a lot of what I've been trading this year has been gold, which has contributed to not a particularly exceptional year for me. This has been a good year for me on this account, up 12.55%, which is good, but not absolutely phenomenal. I would like to continue to see if I can make some extra gains here throughout the rest of this year, but 12.55% is not disappointing for me, but it's not, exceptional either. An exceptional year for me is somewhere above 20%, which theoretically we could still get there. But again, just going to come down to whether or not we get some good follow through on some of these trends. Maybe we'll start with gold. So I entered gold, as I mentioned, with a stop loss below structure right around here, and I've trimmed my stop loss. I actually need to trail it on GLD, but the gold ETF that I actually place trades on. I do trade with Webull, which is linked down below in the description. Here's a current look at all of the positions that I'm in, my SPY, SMH, and we are floating some pretty good profits right now on the full account, up about $89,000, which is an insane figure. And, with context here, remember, it's kind of a bounce back from the crazy volatility that we had the last few weeks. I stayed on the long side of the market pretty much, and that ended up working out okay. Had the market kept going lower, I might have, seen my year really reverse. Sorry for my phone going off, guys. I'm going to turn that off. So anyways, with gold, what I'm looking for is I do think it continues higher. My goal here is to trail my stop loss. I entered this inside of our VIP room, and just a heads up, that is something that we offer. If you'd like to see all of the signals that we're sharing, full context, why we're taking the trades, I'm trading indices. I traded gold in here, as I mentioned. So, taking a look at the COT data, which I want to look at with you guys here in just a moment. All this is available in our Discord group. If you'd like to join the VIP service, it will be linked down below in the description. So check that out if that's something you're looking for. It is definitely worth the money. It's not a free service. There's a lot of time and effort that goes into this, and you're unlocking, the skill sets that myself and Frank and some of our other team members have, this is our life work kind of thing. So if you'd like access to that, you'd like access to the trades we're taking, that is an available service in the description down below. Let's push on, because there's other things I want to talk about. The S&P 500 has been a monster trade for me. I have trailed my stop loss on this one on SPY. We can take a look at that, where I'm actually positioned. You can see my stop loss has been trailed into profit pretty good on this one. So if we do see some sort of big reversal here, we came down, we started retesting some of these support levels, but I love that we just bounced off of that. And Jackson Hole, I would say, the symposium, the speech that Powell gave was very, very dovish and very bullish for the markets. When I say dovish, what does that mean? Dovish means that a Fed, when the central bank wants to be more accommodating and slowing of, they want to basically take their foot off the brake with all these rate hikes that we've seen, that's more dovish. When the Fed wants to slow down the economy because they're afraid of inflation, that's more hawkish. So we've seen a bit more of well, definitely seen a more dovish Fed, but on Friday we got an incredibly dovish note basically saying that the Fed plans to cut rates for the rest of this year, and that's super bullish for markets. It's also well, let me back up because I had some questions about this. Are rate cuts bullish for the markets? Rate cuts are bullish for the markets if there is no recession, and this is what you need to know about rate cuts. Are rate cuts good or are they bad for the market? Some people will say, oh, the market will crash when they cut rates. Some people will say, oh, the market will rip when they cut rates. The rate cuts do not decide whether or not we get a crash or a rally in the market. What determines whether this happens is whether or not corporate earnings, the E, right? The earnings of major companies in the United States, as well as, the other E, the economy. So if the economy holds in there, and we get good earnings, those rate cuts could be a very nice backdrop and actually drive the markets higher. Here's a couple of years, Fred. If you're somebody who says, no, rate cuts cause the market to crash, here's a couple of years for you to go look at. 1995, 1989, 2019. All of these years, the Fed cut interest rates into an economy that was doing okay, and it caused the economy to accelerate and actually caused the market to boom. So I'm not necessarily saying that this is going to be a boom from here, but if you ask me which way do you lean, I'm going to say it's more likely to go up than go down because, again, we have an economy that is slowing down but not crashing. Now, if it starts to crash, if it starts to really slow down, I'll change my mind. That's why I have trailing stops, and I'm a trader, not not long-term investing here. These are trades. So I don't have 100% commitment to this, but fundamentally right now, I am leaning bullish. Looking when I talk about the S&P 500, I don't see the headwinds just yet. If something changes in the wind, I'll adjust to it as best I possibly can. That's all you can do as a trader. So I do like the S&P 500 to the upside. I want to talk a little bit about what we saw on the COT data this week. Let's see where this is at. So if we take a look at where we're currently positioned, institutional money is still very long gold and silver and oil. So commodities are still very heavy on the institutional buying side. And then on the downside, you've got the Canadian dollar, the Swiss franc, 10-year treasury notes. You got NZD, AUD. So a couple of things bearish, a couple of things bullish, and I would say everything in between there is pretty much neutral. Though, if you take a look at SPX, there's a slight lean to the bearish side, but not by a huge margin. I like to use my 60-40 rule. If it's 60% short or 60% long, that's kind of worth mentioning. That's significant. But if it's not above that threshold or below that threshold, I kind of just call it neutral. So we look at NASDAQ, SPX, and Russell, and Dow Jones. These things Dow is close to leaning bullish from institutional money, but it's not quite there. So anyways, I want to keep going here because we have, a little bit of a week-to-week bias that I think is interesting here. So this shows you the week-to-week buying or selling that took place in the commitment of traders data. This stuff is long-term. This is useful to look at if you're a long-term trader or even investor. But if you're more short-term, this is something to pay most of your attention to, the latest week-to-week filing. They bought the Nikkei, they bought the Dow, they bought Euro, Pound, NZD, Silver, Platinum, Aussie, Copper, and they bought the NASDAQ. They also bought some gold on a lighter note, a little bit of CAD, JPY. Now we get into things that they sold. They sold JPY, which is fascinating. They sold the yen, which, again, we were really concerned for a little bit there that they didn't sell the yen, but there wasn't like a huge short covering. And this is huge to me, guys. If you're somebody who watches the channel regularly, we were very zoned in on what they were doing with the Japanese yen the last few weeks. Because if there was huge buying of the yen, that's concerning. If there's selling of the yen, that's positive. Because remember, the global reserve or the global kind of borrow currency that everyone shorts to go borrow other things and buy stocks and bonds and other currencies is the Japanese yen. So people sell the yen because it offers a very low interest rate. The Bank of Japan offers very low interest, so you can go borrow it and then buy bonds and stocks from the US, from Europe, etc. So when we see a little bit of buying, but also a little bit of shorting going on, hey, that's pretty good. That's back to balance. For weeks now, we've seen huge buybacks of shorts and going long. So, for a long time here, we saw a big decrease in shorts on the yen and a big increase in longs. But this week, beautiful to see a little bit more balance. They're adding some longs, adding some shorts. That's great news and brings back, kind of like a little bit of security. Okay, we're not going to see a huge carry trade unwind right now. At least that's what's painting. That's what we're seeing on the commitment of traders data. On the flip side, though, they did sell some SPX, so the S&P 500 and the Russell, which is a little bit concerning because I own both of these things, the Russell and the SPX. But I like that, there was some support for the NASDAQ and gold, which I'm long SMH, which makes up a lot of the NASDAQ semiconductors like NVIDIA, AMD, etc. And then you got gold. So, overall, I would say this commitment of traders data a little bit mixed, but leans more on the risk on side of things. Despite a little bit of selling here, you've got a lot of things that look okay and especially support some of my positions. Taking a look at the top setups algorithm. Here's something to keep an eye on. These are things that the Edge Finder is bullish or bearish on, and we can, if we want to filter out the neutrals, some of our users just choose to do this, and I like to do it as well. Take out the neutrals, and then now we just have our list of things that are bullish or bearish on the Edge Finder. I want to take a second and just mention that if you are somebody looking to get access to the Edge Finder and you've made it 15 minutes into this video, stay tuned, because this week we are dropping a big sale event on the Edge Finder. We're doing 35% off. And if you would like some information about that, it's not available just yet, but it will be available Monday morning. Actually, you know what? We'll do this. For those of you guys who made it 15 minutes into this, I'm going to go ahead and get this set up for you. If you'd like to get access, you can use code YTVIP down below in the description. And tomorrow, if you have any questions, you can't do it today because, you can't do it today because there's nobody working at the office. But my support team will be available to chat if you have any questions starting Monday morning. So just a little bit of heads up. We're out of the office. I do these videos on the weekend, but I have a team that helps with, supporting members who are using our software. We are a software business out of Atlanta, Georgia. And, we work really hard on these tools. They're really remarkable stuff. And if you're looking to get access, now's a great time to get that nice 35% off discount. Gold is remaining bullish in the Edge Finder. I love to see that. We got the Nikkei on there, which is interesting. I'd like to keep an eye on the Japanese stock market as it bounces back. We have dollar yen still getting a bearish reading, Swiss franc, euro yen, euro pound, CAD yen. There's a lot to look at here. So what I'll do is I'll go ahead and jump into some currency pairs just for a moment. Let's take a look at the euro, which I believe is getting a bullish reading. Yes, +7, very nice, with COT data kind of supporting that. Actually, let me double check this. Did they sell the dollar? Let's see. Did they sell the dollar? Yes, they did. They sold the dollar pretty aggressively. That's a big one too. So the dollar getting sold makes me even more bullish on these things. When we take a look at the euro, we draw some fibs here. I'd love to see a 618% retracement. We may not get it though. This thing is moving with some conviction. Sorry for the huge yellow line. I didn't mean for that to be that big. Still pretty big, but we'll take that. If we do get some retracements on that, or we get a retracement on pound USD, these are charts that I'm watching. I do continue to like the short side for the dollar. We have, I would not personally be shorting these things. This is, of course, not what I would do. You do whatever you want. I don't care what, it's up to you. Your strategy is your strategy. But for me, I'm not looking to short these things. I am looking to get long on a pullback. I think that, as the Fed continues to look to cut rates, that is going to drive the dollar lower most likely, though we may see a bit of a bounce on the dollar before that continues. We've seen a huge slide in the dollar. I would see it as very normal price action for the dollar to retrace back up to levels like 102.5 potentially before going lower. But please understand, I'm not saying that has to happen. It could just continue to go lower and not ever make that sort of retracement. I'm just saying that for me, if you get this kind of yellow dotted retracement that I'm drawing, that to me looks like an opportunity to get short again on the dollar index. And some of my favorite contenders are what I'm already long, which is gold, but also looking at things like the pound against the US dollar and the euro against the US dollar. That 38.2% looks really clean on the pound. And, just something to think about here. A lot of times people get really fancy with their price action. They'll get into things like smart money concepts, or they'll get into, more advanced tactics or Elliott waves, or they get all fancy with it. And I'm not here to pick on people who use those sorts of strategies. If it's working for you, what does it matter what I say? It shouldn't even bother you. But here's what I would say. Don't overcomplicate it, because in my view, the textbook simple technical analysis has led to the results that I show you. And I say this not to be arrogant or trying to pat myself on the back, but when I show you these results, right? When I show you this stuff, These are live brokerages. This is no nonsense, no nothing. I don't use any of that stuff. I don't use advanced fancy technical analysis. I use the textbook simple technical analysis in combination with what I really think is most important to look at personally, the fundamentals. I'm looking at economic data. I'm looking at GDP, retail sales. I'm looking at what the Fed looks at, inflation, employment data. That is what I'm looking at to make a decision in the markets. Then I just use simple technicals to put entries and stop losses and trail stops. It's really that simple. But the reason I show you this P&L is not just to brag, but to show you, okay, if you're going to be learning from somebody, make sure they're showing you something like that. Don't waste your time. Are they logged into brokerages? I have no problem showing my account because, again, I'm not here to try and like fake my way to making millions. I don't, that's not my effort. Or my goal here is, of course, I have a software business, so I sell software, but I actually am helped by showing you, a lot of people I think appreciate that I show my live brokerage account, even though it's not always easy to do, especially when I'm going through drawdown. It helps my business. If I'm being really honest with you guys, showing transparency and a track record helps you sell stuff. That's just the most honest I can be with you. So, when you watch my videos and you see this stuff, I just want you to know you're not wasting your time. And if you're somebody considering getting access to the same tools, know that I'm not just trying to sound smart with this stuff. I actually use it to place my trades, to look for better opportunities. So just wanted to mention that and hopefully give a little bit of context there. NASDAQ's getting a bullish reading, so I want to take a look at that. So I am already in SMH, as I mentioned, which is a semiconductor ETF. So companies like NVIDIA, which has their earnings coming up, by the way. Is that this week? Yes, it is. NVIDIA earnings come out August 28th. Mark your calendars, because you know what? August 28th, 8/28, that is the day that the market either rips higher or has some problems. Because again, NVIDIA earnings are so important to this market. I am long NVIDIA going into that event. I bought NVIDIA on the dip recently, and I don't usually trade individual stocks, but when we had that big dip, the 16% or whatever dip it was on the NASDAQ, let's see, it was about 17%. We had that 17% correction on the NASDAQ. I started buying some of my favorite tech names. Some of my favorite tech names are NVIDIA, CrowdStrike, Tesla, Airbnb. It's not really tech, but it's a company I wanted to add to. And I bought some Google. So, I'm a long-term holder from here on some of these companies. I'll probably trade some options on them, which is, something I will be sharing inside of our VIP room. But, they're just portions of my account. But predominantly what I'm doing is trading, these, tech ETFs like SMH and IWM. I want to talk about the Russell because this is where I'm most convicted, where I'm most passionate right now. Passionate's a weird word for this, but you know what I mean. Like the most convicted right now is actually the Russell. Small caps have been forgotten the last few years. Take a look at the weekly chart. Here's going back, if you've held the Russell, if you held it from here, let's just say you were looking at your position at this point. If you've held it since 2020, you have made 0% gains if you bought and held this index. In fact, at one point you were down, 19 or 18%, which is, rough. So my point with that is the Russell's been forgotten. Why? Because interest rates have been pretty high. So interest rates are not good for the Russell because the Russell is full of companies that need to borrow. Okay, so if companies need to borrow money and the interest rate is high, what does that do to their income? It hurts it, right? Because if they have to borrow money and the interest on that is higher, it's more expensive, their values are going to go down. But what we see here happening in 2024, and it is exciting, is interest rates are set to come down into an economy that is cooling off, but doesn't show any signs of really cracking in my view, right? So when I say that, when I see those combinations, I say, oh, the Russell has potential to finally do the thing. It finally may make its move higher. And, I got long on this recent pullback. IWM is what I personally traded. So IWM here, I bought the dip on that recently here. And on Friday, it rallied harder than the rest, guys. The Russell had a wonderful day on Friday because it here, look at this, 3.16% compared to the other three U.S. indices that were up, shy of 1%. Why did the Russell do so well? Because again, the Fed chair, Jerome Powell, basically came out and said, yeah, we're going to cut rates. We're watching the jobs market close. That's my point. The Russell has plenty of room to the upside in my view. I'm going to be trailing a stop on this one. And if I do get trailed out, I'll probably be looking for an opportunity to get back in. And for those of you guys who are not in the U.S., here's something to note. I know, you might want to trade the Russell yourself, and you may not be able to trade IWM, or maybe you can't try, maybe you don't have a stock brokerage. Couple things. If you'd like to use a stock brokerage like I do, Webull will be linked down below in the description. I highly recommend you check out that broker. You can also check out another broker down there in the description, Vantage, which will get you access to, you can trade US 2000, which is a CFD for CFD traders. And if you're looking to trade FX in the United States, there's Oanda. There's several different brokers down there. Please take a second. If you're looking for a better brokerage, check out some of the ones linked down below. If you choose to use those links, they are referral links, and they'll be supporting my channel. We do get a little kickback, but you also get some special sign-up perks. Check them out. All those brokers that I just mentioned, they have some special sign-up perks available to my subscribers that you can find out more information on by going to the description. So thank you guys for watching. I hope you have a great trading week ahead. Trade safe. We'll see you next time.